Good afternoon, everybody. Please take your seats. We're about to start. It's a great pleasure to be with all of you today. My name is Faiz Amesani. I'm the blockchain lead at First Rand Bank in Africa. We're really at a very fascinating juncture in human history where we've been learning a lot about the technology over the last few years, but with the technology comes a real shift in paradigm about how our structures of society are working, how our institutions work, what their shortcomings are and what their benefits are. So today we're going to be really looking at some of these main institutions at the center of our current financial system, central banks, and their attitude towards blockchain and cryptocurrencies. What are the pros, why are they looking at it, and what are the cons, and why shouldn't they be looking at it, or what are the risks? We've got a lovely panel lined up for all of you today. So I'm going to ask everyone just to introduce themselves very briefly with their name and their institution, where they're from, and then we'll get right into it.
Hi, I'm Gabriel Abed. I'm the CEO of Bit.com, a Barbadian-based financial technology company.
I'm Roblet Ali. I'm a research scientist at the MIT Digital Currency Initiative.
Hi, my name is Renako Brathwaite. I'm from the Central Bank of Barbados. I spent 12 years in regulating banks in Barbados.
Super. Hi, Ed Budd, Chief Digital Officer for the Transaction Bank at Deutsche Bank, and representing the utility settlement coin project here for the debate.
Amos Miri, co-founder and CEO of Kolu, based in Tel Aviv.
Thank you so much. So really, if you've been watching the headlines of the past year or two, you would notice that every single central bank of note across the world is looking at blockchain technology, is looking at cryptocurrencies, whether they're central bank issued cryptocurrencies or permissionless cryptocurrencies. And that trend is just continuing. So every single bank is either testing, putting out papers about it, or doing prototypes on this topic. So Roble, I know you have spent 5 years at the Bank of England and have recently spent some time or have just joined MIT as an academic. Tell us a little bit about what you've seen from the central banking perspective inside and also academics of why central banks are taking this route.
Right. So I started working on this in 2013. So 3.5 years ago, and I think the reason central banks are interested in this because they've got this financial stability mandate, so they have to think about the whole system, and they also have to think long term, like what's going to happen, not just over the next 2 or 3 years, but what's the financial system going to look like in 20 years. And I think another unique aspect of central banking is that they tend to be a sort of hybrid of policy and research institution. So if you look at any central bank, they're going to have like a big research department. They hire a lot of PhDs. So it's a fairly common thing to do, like research into like macroeconomics, obviously, but also other subjects. And I think, or other subjects that can affect the financial system. And I think when Bitcoin came along, there was this idea about, okay, it was structurally so different from what had come before. And it's sort of within it, for all its limitations at that point, and for all the fact that it was relatively small and still is in the context of the whole financial system and all the money in issue. So it wasn't like an immediate financial stability problem or challenge. I think that they wanted to think about, okay, if we had a financial system that looked more like Bitcoin, like what's the role of the central banks, how the market's going to function, and I think that's why central banks have decided, okay, we're going to spend some time and put some resources into investing in this and thinking about it, because it's just it's a very common thing for central banks to do research in areas to sort of try and develop their thinking to be prepared for the future.
Okay, fantastic. I had an opportunity to speak to one of the Federal Reserve governors about a year ago, and I asked her what the Federal Reserve is doing in the blockchain and cryptocurrency space, and if they would be leading the way. She said something very telling. She said there's a lot at stake in the United States. It's such a large system, and so they're actually looking at the developing world and the emerging economies to lead the way with this technology. So Renako, being in the Central Bank of Barbados, from the inside perspective, what's going on? There's a lot of hype, and there's a lot of FOMO out there, but is there real substance to this within the central banks?
Let me first just state that these are my opinions, and from our perspective, or from my perspective, we're watching. You know, as we have heard over the yesterday and today, there's a lot of potential, and the impact that these things can have on the financial services area is nothing to take lightly. So we would like to, you know, fully understand the technology, the impact it could have before we implement our framework, or before we can even think about implementing a framework around the fintech and blockchain.
Okay. So let me ask Gabe. So Gabe, I think a lot of people in the audience might be thinking, we're talking about a decentralized technology, and yet we're talking about a central bank. Is that not an oxymoron? And what are your views with working on central banks about using this technology that's decentralized for a centralized institution?
Well, depends on how you look at the scenario. For a central bank as the monetary authority of a country, decentralized cryptocurrencies represent a lack of control in their world, or initially it did. But looking at how you can expand on top of the technology by building open assets or pinning fiat currency to the blockchain world, it re-enters central banks into a realm of relevance when it comes to fiscal policies and monetary controls. So what we've been doing is taking this decentralized technology, keeping it decentralized, but giving central banks the capacity to participate in this decentralized world while maintaining their self-sovereignty, their control, their issuance over a platform.
So speak to us a little bit about when you say it's decentralized.
Okay.
What does that mean?
Well, decentralized in the essence is that there's no central authority, there's no central form of control. The inability to thwart or stop a transaction from being completed on this sort of system. So what would occur is while the central bank can still issue, this decentralized digital dollar acts exactly like the cash dollar in your pocket, the physical dollar. It has the capacity to be moved peer to peer. It's mobile, and it can be fixed to a counterparty held by a central bank.
Awesome. Amos, you're working at Colu a lot with BIT and the Bank of Barbados. Tell us a little bit about the work that you're doing and also what you're learning from that work with central banks.
Yeah, so we took kind of a little bit of different approach. Instead of waiting for that technology to be implemented with the central bank, although working already with BIT in Barbados, we said, okay, how we take the set of tools that's going to be used to manage a digital economy, and we developed something called an economy in a box, which is a set of tools compiled of a control panel for the issuer to issue, distribute, manage, track, and analyze a user wallet and a business wallet. And what we did is that we said, okay, we need to become an issuer ourselves and use those tools, understand the technology on one side, how users are going to engage with the fiat digital currencies. And what we did is that we issued local currencies in cities, both in Israel, in the UK, in Liverpool, in London. And we actually test those technology, this set of tools on microeconomies in cities, together with municipalities and other authorities, regulations. And then we take those set of tools, and when we approach a central bank, then the discussion is far off from experiments in labs, but actually able to take the technology and move to something that is a little bit more than a POC, but actually giving those tools to users to use them, transact, understand security models, regulations, and all of the things that involve in the risks of what a central bank worries about. And this tends to work. We started working already with 2 central banks. Hopefully goes into productions with a test environment in cities, just like we started deploying our local currencies. And I believe that in next year or 2, we'll start seeing more and more central banks moving from labs, in research to actually understanding, because there is no other way, you know, to really understand how it's going to impact than use the tools yourself and analyze, go back and develop, you know, other things that are needed in order to engage with this technology.
Perfect. So actually on that note, Ed, you've been involved with the utility settlement coin. There was a huge buzz about that at the end of last year. An initiative with several different banks coming together, Santander, BNY Mellon, Deutsche Bank, etc. So tell us a little bit about that. We haven't heard about it too much recently. Where does it stand? What are its aspirations? And how is it being received by the central banks in those economies?
Sure, so maybe a quick recap, because it is a project that's heads down working and not something that we're out there talking about until some real conclusions have been reached, which is coming pretty soon. And in terms of the next phase and how it scales up, that's news to follow. But essentially, we're looking at one of those big assumptions that we've seen in almost every proof of value, proof of concept that you see out there, which is the payment part of the transfer of value. It has a huge number of assumptions built into it. So we had a particular focus on securities, and so see all the projects, they work really well, but we make too many assumptions about the efficiency of the payment piece getting done. And so a project here which is focusing on how do you bring real fiat currency in, or something that has the properties of fiat currency into the ecosystem, so that we can make a slightly bigger step forward than just getting more efficiency on the asset side of the register. So the objectives are to put a framework together to really discuss how that happens. And the vast majority of that work is not technology focused. And so on the point of how it's received, you know, that the work that we do and the investment that we're making as a group is very, very focused on the legal accounting treatments, the legal entity processes, how things will actually happen in practice, rather than just going and demoing another piece of technology to a central bank. And I think you find that you get a much greater, much deeper level of engagement, because what we're really talking about are monetary policy questions. You're talking about levers for managing economies. And you're also, you know, we're raising some big questions about the future market structure, but doing it in a very practical way through the lenses of accounting and legal, as well as technology.
Okay. Gabe, you talked a little about the benefits of this, but still, if we're talking about a central bank that's monitoring and kind of regulating its financial system nationally, those payment systems currently work, right? So why are we moving towards something else? And what are the benefits beyond some of the ones that you just talked about, Gabe?
Well, when looking at a society or an economy like Barbados, we're cash dominant. And cash, as we know, is a very frictional system. So one of the main advantages is a frictionless environment can occur. But this also breaks down into democratizing the payment space, then seigniorage, then cash management, cash accountability, cash mobility, the ability for a central bank to monitor an entire economy that is utilizing digital dollars in their sending, receiving, and transactions. That is unprecedented in terms of the knowledge that they can gain about their own country. So there's just, I listed a few of the advantages, but the biggest one is financial inclusion. Being able to give the people in a country who have access to mobile wallets but not banking infrastructure, the capacity or capabilities to become global citizens. So that's the main advantage towards the central bank on why they would want to move in this direction. I mean, for themselves, it's seigniorage, they save some dollars, which is the least of their issues. The number one thing a central bank wants when exploring new solutions is stability and efficiency. That's the main two things that they're looking for. And the blockchain field provides that. It provides efficiency and it provides stability. So it's really a muchly needed solution that I'm kind of shocked there's not more central banks around the world doing this. And here, we've been fortunate enough to have 4 of our Caribbean central banks here. We have the Central Bank of Barbados, the Central Bank of Bahamas, the Central Bank of Aruba. So they're actively taking this thing very seriously. Absolutely. So the awareness is there, the proof of concepts have started, and now it's about full production deployment and changing the monetary ecosystem forever.
Awesome. Roble, let's move a little bit into non-government-backed cryptocurrencies, permissionless cryptocurrencies, Bitcoin, Ether, Monero, etc. What are you seeing? We know that Japan recently made Bitcoin a legal form of payment. We also know that Russia kind of went against it and is warming up to it. What are we seeing broadly about the regulatory regime towards these currencies, cryptocurrencies?
So I think there's there are sort of different interests at play, right? So you've got consumer protection is a big one that weighs on the mind of policymakers. They don't want to see people, losing their money. So they've got to think about, okay, how do you, if it's going to be widely used, how do you ensure that people can use it safely? And also there's issue around if you with a cryptocurrency, if you lose your private key, then the money's gone, right? So you've got to be careful about that and make sure people know what they're getting into, if nothing else. But then also there's things like innovation, and I think that policymakers are not. They don't want to stifle innovation. I think people are conscious that, particularly in financial services, it's been, post-crisis. I think new thinking is the general view is new thinking is needed and to be encouraged and not to be stifled. So I don't think. I certainly never got the impression that, and I think it sort of depends on which institution you're in and which bit of that institution you're in, because I was in the sort of research bit of a central bank, which is different from enforcement bit of a securities regulator, whatever. But I think people do see the benefits, right? They do see how.
And to be clear, the benefits of Bitcoin and things like that.
Benefits of having something new come along that shows a completely different structure and really, provides genuine competition and genuine innovation, which has not really been that much seen in financial services up to the point when Bitcoin came along, and a different structure as well. It's when I first saw Bitcoin, what was interesting to me was it shows you a completely different way of structuring the financial system. It's like a microcosm, and I think that's what. That's what got me interested in it. And I think, public policy institutions, they're like broad churches. There's a lot of different opinions within. So when people say, central banks think this or whatever, there's a lot of opinion within a central bank. And I think there's a debate going on now, but I think that's healthy.
Okay, awesome. So Renako, let's talk a little bit about how a central bank feels in this new paradigm. And the reason I say that is if we look at these cryptocurrencies, one of the beautiful things about them is that they pay no heed to national borders. Things that are man-made kind of paradigms in our own minds as human beings. And now money can flow cross-border as frictionlessly as national currencies can. So are central banks feeling threatened? Do they know enough to start feeling threatened? And how are they feeling about this?
I don't think they're feeling threatened. In fact, the Bank of Canada would have recently published a paper which suggested that in order for these currencies to survive, the regulation is needed. So I don't think that there is a need to be threatened. I wouldn't want to say that they don't know enough about it to be threatened, but I definitely don't think that there's something to be threatened about.
Okay, so let's just try with that a little bit more, and I'll open it up to the panel overall. As an example, I come from South Africa. Right now, South Africa can, about 30,000 merchants across South Africa have the functionality to accept Bitcoin. That same Bitcoin can be used in the US, in China, in Japan, etc. Knowing full well that the financial system currently makes a lot of its money from the frictions that occur between transactions of different jurisdictions, FX transactions, etc. Why would I, as a consumer, assuming we can solve certain scalability issues, why would I, if I can use cryptocurrencies, and we said that central banks are becoming more open to them, why would I use a national currency, whereas I can use a cryptocurrency and I don't need to hedge myself because my costs and my revenues are exactly the same in the same currency?
Well, liquidity. You look at an island like Barbados that has very strict foreign exchange controls. There's a need for the society to move digital. But if everyone was to start transacting in Bitcoin,
right,
we would very quickly run out of foreign exchange. which is not a good scene for imports and the stability of an economy. So the idea of digitizing a national fiat is to get all the benefits of blockchain, which is the peer-to-peer abilities, the security, the immutability, the proof of transaction, etc., and being able to give that accessibility to the average guy on the street. So you're stepping away from a liquidity trap and enabling an entire people. It doesn't mean Bitcoin can't flow in. It's the outflows that are the problem. So national digital fiats solve that problem when it comes to mobile banking that does not exist in the region of the Caribbean and many other developed nations around the world. Underdeveloped nations, sorry.
So maybe I'd like to explore this a little bit further, because I think a lot of people in the crowd also may be thinking this, is that if you look back at the history of the human race, I mean, just really take a step back, we see that humanity has evolved really from families to tribes to city-states to the nation-state. And right now, the nation-state is a paradigm that's only about 400 years old. And everywhere you look, despite certain political movements that are kind of trying to contravene it, there is this movement towards globalization, towards recognizing our inherent oneness as a human race. In that paradigm, right, that we move past the nation state, an institution like a central bank that is inherently defined by that nation state system, how does it hope to survive as the world moves forward? And I'm not talking about in the next year or two or three. I'm talking about in the next several decades.
It's a whole different level of, all the different levels of structural change that you're getting to, right? And in the last example, that push from consumer experience into what is commercial models, I think is also one of those, one of those pieces that plays into it. So you think about the frictions that exist there today, doesn't mean you have to have a different model to remove those frictions. I think what it does is expose the level of those frictions, the cost of those frictions. And actually this enabler can play a really important role in removing them, potentially, without changing the, whether it's the geographic parameter that you're setting. You don't have to go just global to solve those frictions. But I also think that's part of what's really neat about this space, which is, the piece earlier about do people feel threatened about it and because it's changing. I actually think you got the very opposite effect, which is we've had a really great mindset shift where people have taken their heads out of the guts of the friction, whereas particularly I think as an interbank industry, we've spent so much time fixing points that are so far down the chain that you don't really bring the benefits to those at the end, which at the end of the day are customers, whether they're individuals or commercial corporates. And so we've been able to take a much broader look, which I think is where those frictions are inherent. And this has, because of the network effect of it, has a really good chance of solving them on a much bigger scale. So you've got people's perspectives have been really changed. So it's a great challenge, but it's also challenged the mindset, I think, of those that have sat fixing points so far down the stack, you just don't really make a lot of progress.
Okay. Other thoughts?
Well, the evolution of where this thing can go is what you initially asked with the advent of globalization. So looking at BIT, or rather central banking at 50,000 feet above, what you can imagine as part of globalization is more trade agreements being settled using central bank digital dollars, bilateral currency swaps. Like maybe Guyana and Trinidad have a trade agreement and doing 25% of their exports, an index currency can be created to allow a bilateral currency swap. Then looking at a region like CARICOM within the Caribbean, where you have multiple islands and a trade agreement that's never been activated.
Tell us who CARICOM is.
The Caribbean Community. It's a revised treaty of 1992, the revised Treaty of Chaguaramas, that mandates around 15 islands in the Caribbean: St. Lucia, Barbados, Trinidad, Haiti, etc. And within this mandate, there's provisions for a multilateral clearing facility. But it failed in 87 and 92 because of lack of technology, lack of participants. So, I mean, what you can imagine is a synthetic monetary union being formed. You can imagine more trades being completed over index currencies that are formed overnight. You can see automated clearing and settlement happening between central banks and commercial banks under them and traders under that. So I see a whole different world of central banking.
Awesome, awesome. Other thoughts? Amos?
Yeah, I mean, I think that in the end, central banks want control,
Say that
they will
again?
want control, over each one of their currency in the States, and this is why also, the word goes like Brexit, things that happen around the world show globalization, or capitalism. You can look at it different ways. I have problems, so I don't think something like that will work.
Something like what?
Something like a global currency, that will really take over, and everyone will just use the global currency.
So if I said to you, and if we look back at our history, and we say the Federal Reserve was only established in 1913, just over 100 years ago. Most of the central banks of the world are not even 100 years old. And yet we're in a policy paradigm where our interest rates are at all-time lows, our growths are at all-time lows. We're trying to do unconventional monetary policy because conventional hasn't really worked. And so it feels like these institutions are struggling to really revive the economy. And then if you also look back in history and you say, well, actually, before we had a central bank, we had lots of different banks issuing their own tokens, effectively. But then they came together and those tokens were unified at a nation state. Why wouldn't that trend continue towards an international level?
Yeah, so I think there is a real opportunity here for central banks, and the real opportunity here is to change, the infrastructure of how money flows today from the issuer to the consumer. There are so many third parties involved in that, and this is another question of what's going to happen, to commercial banks, right? What's their job is going to be after there is an option of really having, a central bank issue money to the user. I'm not saying that this is going to happen, but the technology allows it, so the users can really use and hold their own money in their own private keys. And then there is, I think the opportunities over there is really remove the friction, remove the cost, interoperability between other players, level the playing field for other players. And I think, we're going to see a new business model for for commercial banks, and they're going to serve. I don't think they're going to disappear, right? But they're going to have different business models and different job in the ecosystem.
Okay.
So I think, I think I dispute the premise of the question to a certain extent, because you could argue that, Bretton Woods gold standard was an international system where everybody was fixed to the same commodity, and then when the US withdrew in the 70s, then that went back to having, then you had like free floating national currencies. So you could argue that the progress is in the opposite direction, and then in the UK we saw local currencies. So we had the Bristol pound and the Brixton pound and things like that. So I'm not necessarily sure that I agree that there's this inexorable march towards globalism.
Okay.
Maybe if I add on
Please.
to Amos there, because I think it's a great point. You don't want it to sound like you're advocating that there's going to be no change. I think one of the things in all those scenarios, when you remove the frictions, it's not just cost and efficiency that you're doing. You're asking fairly big structural questions about the roles of those within central, commercial, and retail. And part, I think, of what's needed more is, the technology is an enabler. I think that direction of travel is pretty clear, and it's capable of doing that. But most of the questions are policy questions. And other, it's questions, our central banks are there around security, stability, access, innovation, those types of pieces. So what do they do in a world where it could go this way? There's a lot of theory, but I think what the development of distributed ledger has done, it's put a potential tool on the table for practically implementing things that may hitherto have been not really practically doable. And so, one of the objectives that we have within utility settlement coin piece is to challenge a lot of those assumptions and to really say, in an active way as commercial banks, what if? And how would that look? Because if you're not asking those questions, then it just comes back to it's just about the technology. But I think the vast majority of the debate that we have is very focused on the policy, the structure outcome, the stability of deposits, how does that work? It's much more about balance sheet accounting and structure than it is about just the technology or the globalization piece.
And on that point, with questions asked about central banking themselves, as you said, there's a whole cascade of that entire system from central banks, commercial banks, consumers, etc. how do we see commercial bank changing in this new paradigm, being the intermediaries of money that are currently in existence, that many of the people in the audience and at conferences like this are actually hoping to get rid of. So what is the future for commercial banking?
Well, looking at what is happening with regards to digital national fiats, keeping in mind, if the central bank's the issuer or the minting process, then it's strictly limited to narrow money, sorry. The real money printers in economies are banks, right? They're the fractional reserve lending and stuff along those lines. So the banks will always, in my opinion, have a very useful position in the broad money scenario. It's the narrow money. It's democratizing of the payment space and allowing financial institutions, credit unions, telecoms to almost become distributors or become digital cash account providers. So how we envision it is we've broken down the money base or the money supply chain into 3 simple layers. The issuance layer at the top, layer 1, the distribution layer, layer 2, and the retail layer or interface layer, layer 3. And commercial banks fit directly in layer 2, but so do telecoms, financial institutions, and these are your distributors. And I see that as democratizing the payment space completely. I don't see banks being the ones to allow me to facilitate payments.
Okay, so are you saying that right now banks are at the central ecosystem of payments as well as credit extension, as well as storage of value, as well as provision?
Depending on the jurisdiction that you're in, most licenses as applied to commercial banks give them that capacity. Not only that, but it's legislated monopolies that enable that.
So do you see that changing? Will banks in the future not be involved with payments?
I don't think they're not going to be involved. I think they definitely will be involved. I just don't think they will be the only players. I think we will actively see other corporatocracies and legislation reform move towards payment banking.
Okay, awesome. Any other thoughts?
I think when Bitcoin came along, that was one of the big changes that it brought was it split away payments and banking, right? So now, before, if you wanted to make a payment electronically, you pretty much had to do it across the balance sheet of a commercial bank. You had no choice, which meant you had to hold an account at a commercial bank. And when Bitcoin came along, it said, look, you can make payments without access to the financial system, you can move value without access to banks. And I think that is a big change. And I think the other big change is how is money created? So at the moment, most money is created when loans are made. That's basically how money creation works. And most of it is created by private banks, right? And if you look at digital currencies or private digital currencies, Bitcoin, they create money in a completely different way. And again, that's like challenging the way of what money is, how it's transacted, what the structure of the system looks like. So this idea that banks and payments must be bound together, that's what it challenged, right?
Okay.
Yeah, I think it's a really key point, right? It's maturity transformation, credit leverage. That's the function of a bank's balance sheet. The nature of how that's previously always been transmitted by the way market structure is done is what's called payments today. But we talk about a world where the transfer of value takes place at the point that the obligation is agreed. And so payments as a separate concept is almost something that will seem very odd in a world where it should be part of the process of commerce, not a separated out service. It's almost a discussion about having a faster horse today. It's assuming the product of today is the function of tomorrow, right? Rather than, I think what we want to get to in a digital economy, it's the customer's process that should dictate where that part of finance plugs in, rather than it being then at step 45, it has to step out and do something completely separate. That I think is a much more connected way of thinking about it. And in that world, yeah, whether it's driven by other regulations like PSD2, we're heading that way anyway. And it's much more orientated to the process of commerce than separate financial product silos, which is, I think, a natural driver for the change of business models for banks anyway.
So if we're saying that this technology is going to be probably an inherent part of what a future financial system looks like, let's talk about the evolution to get there. Today, is the technology ready for, say, a central bank, a forward-looking central bank said, today I want to move my national payment system onto blockchain. Can we do that?
Yes.
All right, tell us about that.
So, we are already doing that in a scale of a city of hundreds of thousands of users. So it's possible to already deploy in some way. I don't think it's going to be responsible to do it in full scale in a big country in the next year or even 2. But I think that in 3 years it's going to be fully possible to do.
So tell us about what your model is, because I think there's the purely permission blockchain environment where we say that we have no integration into the public blockchain space, and there are those that say, actually, let's use the security of the public blockchain to issue colored coins on top of that that would represent fiat currency. What are the views of the panel?
Yeah, so I don't see a central bank right now issue a currency on a public ledger because of the control needed, to put different rules and different things that it needs in terms of regulation and some other stuff. So I think that right now permission blockchain for that space is the only way to go with central banks. I do believe that as time moves on and public blockchains matured, scale, consensus, all of the problems that I have right now with public blockchain, we are going to see the interoperability with the permission ledger and the public ledger, and those things are going to connect for sure.
Okay, what's the question?
Basically, permissioned. I think some people and some solutions are backing into the public blockchain, but I think the consensus is that may not be the right thing. So, but I think there are some other options that I think you guys are involved
There's several. You see, the thing that's I shouldn't say least important, but not as important as it was last year, is the technology side of things. You have the Omni and Tether systems, you have ERC20 Ethereum tokens, you have the colored coin protocol, you have the Lightning implementation of the colored coin protocol on Litecoin. So there's no limitations in scalability and throughput and accessibility. It's really methodology, procedure, and process. That's the hindrance right now. The central banks have an idea that this solution can work for them, but they want to see how it's going to work for them. What's the process of issuance? What's the process of transaction integrity, or auditing the process of how a digital dollar is created? Who controls the keys during the monetary expansion policy? Is it the governor? Is it his team? How does the system look? And how does a professional service company like PricewaterhouseCoopers come and audit that entire system? How does a commercial bank integrate, access, and interface with this digital dollar? So these are problems that have been solved in our jurisdiction, and they go further than technology. But I don't think technology is the problem right now. Yeah. It's far from.
I think that, just adding one thing to what Gabriel just said, that I think one of the, of course there are legal legislation and all of those other challenges, but one of the key points is really, in the end, how our users are going to use those tools, right? So for example, when we rolled out our solution at the beginning, we gave the users the private key, and users don't want to hold their own money. They're not ready for that. The technology is still not ready for that, because recovery of a private key right now is a hustle. It's a very
So will we ever be ready for that? Because a lot of the discourse is everybody can hold their own private key and everybody can have sovereignty of their own money. But is that what people actually want?
Yes, I think they do want the option, to hold their own money. But we talked about, what the job, what's the commercial bank role. That might be one of the things, a key restore of a private key and security of your private key insurance, all of those kind of things. I think that giving the people the option of holding their own money and being their own bank, it's the key of, this whole discussion.
Absolutely. I think there is quite a lot of work to be done, because it's 3 different areas. It's like technology, what do you use, how's it going to work, and then that's just all the infrastructure side and the user-facing side. There's the economics, like how do the incentives in the system work, how does monetary policy work in that new world, then there's all the sort of legal regulatory stuff. So it's not like a simple thing, and there's quite a lot of work to be done, but it can be done.
Last few seconds, Ed and Renato, any thoughts about the great challenges going forward for central banks and what they should be thinking about?
I think that the key really, and as Roble and Amos would have mentioned, research. The banks, central banks need to do their research before they can even look at going forward with these things. Research needs to be proven, yeah.
All right, guys, we're out of time, but thank you very much and enjoy the rest of the conference.
Thank you.
Oh.